Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. Real estate investment trusts, or REITs for short, have taken a hit in this high interest rate environment. Higher interest rates tend to decrease the value of properties and increase the borrowing cost. On top of that, higher interest rates make high dividend yielding REITs appear less appealing when compared with low risk, lower yielding fixed income securities. But with interest rate expected to start coming down soon, the outlook for REITs like Service Properties Trust, traded on NASDAQ under symbol SVC, is robust. Service Properties stock has actually been negatively impacted by two issues: rising interest rates and weakness in hotel and retail space. But things have been improving, which is great news for Service Properties Trust. John?
Yeah, thanks, Mo. Yeah, Service Properties is a REIT with over $11 billion invested in two asset categories, hotels and service-focused retail net lease properties. It currently owns 220 hotel properties with approximately 37,700 hotel rooms throughout the U.S., Puerto Rico, and Canada. It also owns somewhere around 969 service-focused retail net lease properties, covering 13.3 million square feet. And that translates, or for a visual, equals roughly 231 NFL football fields. Some of its tenants include Burger King, Travel Centers of America, Kohl's Corp, and Pizza Hut. A full 97% of its leases have contractual increases or percentage rents, providing with a reliable, steady income stream.
And John, let's talk numbers here. How did this REIT do in the second quarter?
For the second quarter, ended June 30th, 2024, Service Properties announced that revenue inched up 1.8% on an annual basis and 17.5% on a sequential basis to $512.9 million. Now, funds from operation came in at $57.7 million, or 35 cents per share, while normalized funds from operation was $73.8 million, or 45 cents per share. And the all-important cash available for distribution was $47.6 million, or 29 cents per share. Now, looking ahead, analysts expect Service Properties to report earnings growth over the next 2 years, from $1.87 billion in 2023 to $1.88 billion in 2024 and $1.91 billion in 2025. Service Properties is expected to continue losing money. After reporting a 2-cent loss per share in 2023, they expect loss to increase to $1.13 per share in 2024 and narrowing to 92 cents per share in 2025. The company will need to continue streamlining its cost side and move back to the kind of profitability it enjoyed before the 2020 health crisis.
If you like what you see so far, check out incomeinvestors.com. While you're there, you could sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. John, what can you tell us about its dividends?
Well, thanks to its reliable free cash flow, Service Properties is able to provide investors with reliable dividend. It reported free cash flow of $248.6 million in 2023, and it uses free cash flow, of course, to pay dividends and reduce debt. Now, Service Properties has been paying a dividend since 2005. It has suspended it once. That was during the 2008-2009 financial crisis, and it has paid a quarterly dividend without interruption since then. That includes throughout the entire 2020 health crisis, though it did cut its payout in 2020. Which shouldn't be a big surprise. It currently pays a quarterly dividend of 20 cents per share, or 80 cents per share on an annual basis, for a pretty big frothy yield of 17.32%.
And how is Service Properties stock doing?
The company's 5-year average dividend yield is 7.52%. The current ultra-high dividend yield of 17.3% is a result of its lower share price. Now, as of this recording, SVC Stock is down 44% year-to-date and 38% year-over-year. Now, the outlook for SVC Stock is encouraging, with Wall Street analysts providing a 12-month share price target of $5 to $8. That's still a far cry from its April 2017 record high of $20.74 per share, but the current economic and inflationary environment shows that Service Properties stock is at least heading in the right direction.
John, thank you so much for your insights. Service Properties is a great equity REIT with geographically diverse portfolio of net leases and hotels. During the second quarter of this year, the company's top-line hotel performance was highlighted by occupancy gains in its full-service and select-service portfolios. Its net leases assets, meanwhile, which are anchored by Travel Centers of America, continues to provide stable cash flow and ample rent coverage. With a strong balance sheet and no debt maturities until 2026, Service Properties is well positioned to continue to implement its strategic capital investment in hotel portfolio that it expects will long-term value for shareholders. This should, in lower rate environment, help juice SVC stock. Until such time, investors can take solace in Service Properties Trust reliable ultra high yield dividend. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.